If you're going to be successful in buying stocks, especially day trading, you're going to have to understand the dip and the importance of the dip. So let's talk about dips. Not the ones you eat, but the ones that are critically important to you to be successful in trading stocks. Most people, when they think of a stock doing well, think of it in a straight line. So you start in the bottom left, you're doing well, and you start growing your revenue to the top right. And if you look at it from a 30,000 foot point, it may look like that. But as we get down into specifics, it's going to look more like this. So once we zoom in or we double click, you're going to see peaks and valleys, peaks and valleys, peaks and valleys. These are critically important to understand. You buy in the valley, you sell in the peak. Now, do you know when you're in the valley or the peak? No, you don't know until after the fact. So that's where the game is being played is. Can I buy at the lowest amount possible and sell at the highest amount possible? And you have to be able to accept the fact that you're not going to hit the exact bottom and the exact top. All you've got to do is make sure you buy for less than you sell, and that's where you make your money. So let's take a look at the Ford Motor Company. You could be trading this stock on a daily basis, weekly basis, or monthly basis. So let's look at it on a daily basis. Look, you've got several peaks and valleys, and this was actually screenshot taken today. So this is actually in the morning, and it's already had multiple peaks and valleys. Let's look at it over the week. Look at that nice little valley there. So while there have been peaks and valleys, the week actually trended downwards and then started trending back upwards again. So I could have bought any time in the last week and be making money today, most likely. As you know, it's trending back down here at the very end on the far right side there. So it's another good time maybe to buy in if I believe in the stock. Again, here's the one thing is, I got to believe the stock is going to trend upward over the long term. If I don't know, I'm playing a game and I'm guessing. If I don't look at what's going on with Ford and make sure that Ford doesn't have some basically bad news coming out or anything like that, I may be buying on the top end of the dip. So read and see what's going on with Ford. What's going on with the car industry? Is there any reason to believe this should start trending downward and continue that trend? Or is this just the normal ebb and flow? The ebb and flow is where you're going to make your money. Same thing if you look at it over the course of a month. Once again, if we zoomed out on that one, you'd have that red line we saw in the previous slide or previous 2 slides ago where it was just angling upwards. That's what's going on. But again, with this detail, we can tell it went up and down, up and down, up and down. But it constantly grew value. So we could be trading this on a day basis, which I'll look at on the next slide, or we could be trading this over the course of a month. Either way, we're making money. And over the course of the month, these jumps are around $1 or more. So what we're talking about is you could have bought in at 11 bucks and be selling at 12.28 now. Now these screenshots we're taking, in fact, if you look at this, the screenshots were all taken within just a few minutes of each other, and notice the difference in value when I took the screenshot at the 1 day mark and then when I changed it to the 1 month and 1 week mark. You'll notice that there's actually been a 30-cent swing just from those screenshots there. So you can actually see that on some of these dips you'll see at the end of the graph. So there's going to be changes, 30 cents, $1, something like that. Let's look at the day trading when I'm on the next page. Okay, so again, or this is the weekly one, the next one's the day one. So again, when you're buying, look for the dips. So right here's a dip. Again, we know that it's trending downwards. Let's buy somewhere in this place right here, and then buy somewhere right here. Now, anywhere in between these two, we can sell. We could buy and sell several times. But the difference between that low point and that the high point right before we hit the next low point where we buy again is probably around 50 cents to $1. So if you take it that, if it's $1 and you buy 1,000 shares and you're able to buy at 11.50 or 11.30 and sell at 12.50, you're making $1 per share. So if you buy 1,000 of them, you just made $1,000 in the course of a week and on one stock. What if you're doing this with multiple stocks? This is where it gets interesting. This is where the money can be made. And again, you can do this multiple times because you could be doing this over the course of a day. Once again, let's look here. I buy here. And again, this is all of what's happened just in the course of this morning that we're doing this presentation. Buy here, I sell here. So I got out of the market. I might have made 10 cents per share. I might have made 30 cents per share, somewhere in there. But I did make money. And again, the more volume I can buy, the more money I can make. I buy back in again once it went down. I sell again once it goes up, and it's trending back down again. So I might put and this is a key, a limit order in again to say if it drops down to, let's say it's trading at 12.59 right now. Let's say I'm going to put a buy order in to buy another 1,000 shares of stock if it hits 12.25, 12.20, something like that. And then immediately put another sell in saying I expect it to go to 12.60, so I can sell 1,000 shares at 12.60 and make that difference between, let's say it was 12.20 was my buy and 12.60 my share. I can make 40 cents times 1,000 shares, so I can make $400 off and on, just continually buying and selling, buying and selling, buying and selling. This is where the money comes in, and this is why the dips are so important. If you're buying at the peaks, you have to wait for it to trend longer upwards to do that. So as long as it's going to trend upwards, you're still okay buying at those peaks. Where you get in trouble is if it peaks and then comes back down and doesn't go back up or doesn't go back up very quickly. You're stuck with that money in that stock for a much longer time period. So put those limit orders in. Right now is a great time to put one in for this stock, if it was this the situation sitting here right this very second, to put one in at where I think it could bounce down to. And then once it hits that, I automatically buy it. And then again, I go and put that sell in. So I'm constantly making that money back and forth.